Welcome to Investors Insights. Our topic today, the decisions for the week. Yes, there's more decisions that will be made this week. Over the past weeks, we have taken time in our vlogs to give you election data and outcomes from a historical standpoint. We've also, from the standpoint, given you economic indicators in regards to elections. But this week, we want to address the decisions this week. And the reason being is there's more than just the election going on. I wanted to let you know that I was totally blown away by the research that Bobby Norman, Trey Booth, and Ty Miller had done today in preparation for this vlog. And we want to share it with you. So I'm going to ask Bobby to start off because Bobby, people are, there's a lot of anxiety. We got election tomorrow. But they also, in terms of markets and things going on, just elaborate more on the data. I mean, I'm asking everybody, if you even want more on this topic, go watch our previous vlogs, but you're going to elaborate even more about elections and markets.
Yeah, so while all attention will be on the election this week, obviously, we as investors are excited to start November because of the seasonality setup of the S&P 500. So as you can see in this chart, the 6-month period from November through April has been the strongest 6 months with an average return of 7.2%. And so while there's no shortage of near-term event risk, upside momentum could continue as stocks enter their best 6-month stretch here. So furthermore, the S&P 500 has finished higher during this time frame starting in November 77% of the time. So marking the highest positivity rate across all other 6 months periods. So while November can bring volatility and uncertainty in election years, historically, it has been the start of a positive time frame for stocks. So as always, no guarantees, but we like the historical market performance that starts in November.
Yes, and that's top of mind for a lot of people in regards to tomorrow and the rest of the week. And it's important. But at the same time, Trey, you brought up that there are some analysis and decisions being made this week. We got 3 days of Fed meetings, and we're watching those as closely as we are the election. So talk about that.
Yeah, thanks, Greg. This is probably the most uncovered Federal Reserve meeting since probably 2020, when everyone's focused on COVID. It's definitely something we're watching closely because in terms of immediate impact on markets and rates, the Federal Reserve is going to have more immediate impact what they decide on Thursday than what's occurring on Tuesday. So we're watching that closely because the markets seem to be focused elsewhere. For some reason, I'm not really sure why. The markets seem to be distracted right now. But it was very impactful. The last time the Fed met in September, they cut rates in what was called a super cut, 50 basis points. Traditionally, Fed cuts and hikes and cuts in 25 basis points. That's 0.25% increments. The Fed cut by 50 basis points, and that was expected to bring interest rates down. The economy was slowing as the Fed was focusing on jobs, not inflation, but the opposite has occurred. The 10-year Treasury went from 3.7% all the way up to 4.28%. The 30-year mortgage went from 6.09% up to 6.72%. So since the Fed cut rates, it's actually pushed rates higher. And that's based on expectations over the next few years that because of them cutting rates too aggressively, we were going to have higher interest rates going forward. And so what they decide this week, 25 base point cut, may have the reverse impact. And so what's going to be interesting, do they recognize the reverse impact they had since the last meeting? Do they adjust? What do they say? I don't expect them to be political, but it's very impactful, and it's even more impactful when people aren't paying attention to it. It's the actions that are happening when no one's looking that really can sneak up on you. So it's something we think is going to be very impactful and worth watching.
Yeah, we always like to say there's headlines and actions taking place in other areas that you need to be aware of just as much as the headline in the news. And so, well said, Trey. And then Ty, people have said to me as I've had discussions with them, and I know you guys have had conversations. Well, what's the Fed looking at? What kind of data and are they making their decisions on, using at this time to to move forward. Talk about that in relation to jobs and other data points.
Yeah, well, the Fed, of course, has a dual mandate in inflation and jobs and employment. And so inflation had been the main focus. And lately we've shifted to the unemployment rate. And we got a jobs report. So last month, non-farm payrolls increased 12,000 jobs. The expectation was for 100,000. That's a pretty big miss. And then, just going back to that 12,000 number, that's the smallest gain for any month since 2019, excluding the 2020 COVID year. And so not a good jobs report by what we would call standards. And then some people would say, well, there was a big hurricane, which is absolutely true. 512,000 workers missed some kind of work for the month because of weather related issues. And so hurricane certainly had an impact. We had some strikes certainly, but some would argue that might have been baked into the number of 100,000 expectation, because it's really not a high expected number compared to what we're used to seeing. And so 12,000 was, again, considerably weak. And not only, were we impacted by that, but also the two previous months were revised down by 112,000. And so that had nothing to do with weather, it may be a strike, here and there, but wasn't weather related. Overall, the unemployment rate stayed at 4.1%. How do we only get 12,000 jobs and the unemployment rate stay at 4.1%? Because 220,000 people left the labor force. They're no longer searching for work or not working. And so that's how you kind of get that that difference there of not adding a lot of jobs, but not seeing an increase in the unemployment rate. And so job market certainly under pressure, certainly something the Fed is going to keep both eyes on, certainly something we're going to watch going forward, because this report was a little discouraging.
Yeah, very much so. So well said, Ty. And folks, let us say this. The four of us as Portfolio Strategies Group here at File Plan Partners, along with our entire team, we're watching all this data very closely, the decisions that are being made this week. We're going to keep you updated. And just know we're navigating through regardless of outcomes. And so we just want you to know that if you watch our previous vlogs, the research reports we send, as well as we're available for one-on-one meetings, phone calls, Zooms, whatever, we're here to answer your questions and to keep you updated. We thank you for the trust and confidence that you've placed in us here at File Plan Partners. And every day, including this week, we are always striving to help our clients have a better, richer, fuller life. We hope this has been informative for you in this week. Share it with others. We appreciate all the introductions and doors you've opened for us, and we want to be there and give you the information you need to remain calm regardless of outcomes. Take care. Talk soon.